Without mastering these two concepts, you will miss the trade. Today we will discuss the essential basics of trading gold with technical analysis. I will expose the truth about key levels versus real supply and demand zones with clear examples. This information is the core of any solid technical analysis trading strategy, so watch carefully. Like this video, subscribe to my YouTube channel, and let's dive into gold trading secrets for beginners. Let's start our discussion with key levels. Key level is one significant price level on a price chart. It will be a completion point, the highest high of a bullish movement or the lowest low of a bearish wave. In order to find significant key levels, you will simply need to identify the points, the levels that gold reacted to strongly. Analyzing this gold price chart, we will easily find a bunch of significant key levels. Let's start with the highest high that we see on the price chart. Look at that price level. Why is that a key level? Because from that level a strong bearish movement started, and that was a completion point of that bullish impulse. The next strong key level that we'll easily recognize is right here. Again, we got a strong bullish wave, the market was growing rapidly, and once that level was reached, the market reversed and the bearish movement started. Then we have another level right here. It is not that significant key level, but still you can see that it was a completion point of this pullback, and when the price reached that point, the market reacted strongly and the price dropped. Then let's analyze the lows. We can easily find a strong key level right here. You can see that the market was falling rapidly, and once that level was tested, from that level a strong bullish wave followed. Another strong key level is right here, and based on the same rules we can see that it was the point where the market reversed and the sentiment changed from strongly bearish to a strongly bullish. And one more level that I wanted to show you is over here. Again, we cannot say that we have so significant price movements from that level, but still the market keeps respecting that over time, and you can see that for now that level nicely holds. Learn how to trade in my trading academy. Watch how I trade live on VIP daily live streams. Get the access to my VIP signals group and get my courses. Combine a unique learning and earning experience. For more info, check the link in the description below. And I have intentionally ignored some important price levels. For example, the level right here. It was a significant key level, and you can see that the price nicely respected that. Once that level was reached, the market sentiment changed from strongly bearish to strongly bullish, and we got a strong bullish wave from that level. But it is not a key level anymore for one single reason. You can see that then in future, the market returned back to that level. And here, the market did not respect that. The market ignored that. The sellers ignored that, and then the buyers ignored that. For that reason, we do not consider that level to be significant anymore, and we remove that from a price chart. For that same reason, many key levels, many historic key levels that we got in the past, we do not consider anymore because these levels lost their significance. That is why it is so important to update your charts to monitor how the market reacts to key levels, because with time some of the key levels become invalid. Key levels that we found on a price chart will be important levels that we should pay close attention to in future. The levels that are above current prices will be called key resistances, and that will be the levels from where we can expect bearish reaction, while key levels that are below current prices will be called key supports, and from these levels we can expect bullish reactions. Key level will always be the main component of the zones, supply and demand zones. Let me show you. What many newbie traders miss when they analyze key levels is that they forget that not only the key levels are important. Other levels that are also important are the candle closes of key levels. For example, let's take our highest key level. What is so important for us to note is that this candle close level will be also important, and it will be also a very important level to pay close attention to. Underlining that, you should know that the area based on the high of a key level and its candle close will compose an important zone. The zone that is above current prices will be called a supply zone, and that will be the area where selling orders will concentrate. A bit lower we have our second key resistance, and again we should also consider a candle close here, and our supply zone will be based on our key level and the level of the candle close. Then we have another key level, we underline the candle close, and here is our third supply zone. Now let's take our key supports. We got our key support level right here, and we will also need to take into consideration candle close of that. Here it goes, and this two levels, key level and its candle close level, will compose a demand zone, area where buying orders will accumulate. Then we have our strong support zone right here, our demand zone right here, it will be a white zone, and we have one more right here. So you can see that we easily spotted multiple supply and demand zones. Now let's focus our attention on these two demand zones. You can see that these two zones intersect, and if you see the zones that intersect, I always recommend to unite them and perceive as one single demand zone. In every supply and demand zone, key level will be the most critical point. And here's what is going to happen when the market will approach supply or demand zones. Imagine that gold prices are growing and the first selling orders will be on the lower boundary of that supply zone, and that will be the point where the first layer of the selling orders will be activated. But selling orders will be concentrated within that entire area, and the higher the price goes within that area, the more selling orders activate. The strongest and the most important point for us will be our key level, will be the high of our supply zone. While the price is growing within that supply zone, we will assume that selling pressure will become stronger and stronger, and this stronger selling pressure should be from our key level. That is why it is the most important point of the supply zone, and for that exact reason we will see that that supply zone is broken only when that key level is violated, only when we close above that, only then that zone is going to be broken. Now let's study the price behavior within a demand zone. Imagine that the price is testing our demand zone right here. We will assume that the first buying orders will be placed on the upper boundary of that demand zone. But at the same time, we will also expect that buying orders will be distributed within that entire area. And the lower the price goes within that area, the more buying orders will activate. Buying pressure will grow, but the strongest buying pressure will presumably be on our key level, on our key support. That is why it is the most important element of our demand zone, and that demand zone will be violated if only the price breaks below our key level and closes below that. Only then the breakout is going to be confirmed. When you learn to understand where supply and demand concentrate, you will be able to profitably trade gold and make accurate predictions. The analysis of the zones and key levels must be an important step in your trading plan. Never place the trade on gold before you analyze key levels and the zones. Use that as the map that 95% of traders will not see. It will help you find profitable trades. Let me know your traders in the comment section if you have any questions. Learn how to trade in my trading academy. Watch how I trade live and get the access to my VIP signals group. For more info, check the link in the description below. Also, traders, please watch my other videos. I have a lot of videos about gold trading in this playlist.